Thank you, everybody, for joining us for our first monthly partnership webinar. We're excited that you're here and hope to have some solid engagement during our Q&A session. I'm just going to kick things off with a quick overview of some key stats that are impacting the U.S. economy right now. So after a rally sharply kicking off 2013 with the stock market, there's been a recent stumble as economic data has made investors a little bit more anxious sort of about the trajectory of the U.S. monetary policy. While inflation has eased from the 9.1 high last June to about 6.4% this past January, it's still elevated, and energy, housing, food, and other items keep putting pressure on prices. This elevated inflation is likely to keep the Fed on track to raise interest rates at the March meeting, and most likely will signal further increases in the future. And as we've heard from a team of strategists at JP Morgan, they sort of warn that it's premature to believe a recession won't happen in the future because monetary tightening tends to lag between 12 to 24 months behind the Fed's decision. And it's sort of, as we all know, the American worker falls into the crosshairs of this tenuous economic outlook, with many workers, regardless of their income, struggling to save money for the future, and they remain living paycheck to paycheck. And so this panel is going to focus on emergency savings as a benefit, which is a solution that can help American workers remain resilient in the face of these economic headwinds. And this is very timely, given that this week is America Saves Week. So with that intro, I will pass things over to Sid, our founder and CEO, to give a little bit background on himself and workplace emergency savings as a whole.
Great, thanks a lot, Ben. I am going to start presenting my screen. Let me know as that comes through. Just to introduce myself here, as Ben said, founder and CEO of Sunny Day Fund, really passionate about what we're doing about enabling financial well-being for all. My background, I think most relevant to this is I'm an immigrant to the US, and as a result of my entry here, definitely went through the trials and tribulations of being denied some of those banking services that we can sometimes take for granted, as well as those early financial crises that definitely gave me a little bit of heartburn when we were starting out here. Beyond that, I have a PhD in MBA. I've really focused on building inclusive systems driven by behavioral economic principles, as well as some consulting experience. So I know what it's like to transform an organization. Again, what we're doing at Sunny Day Fund is enabling all employees to achieve financial stability and freedom, really starting with workplace emergency savings. Mm-hmm. So when we're getting started, the one thing that I want to start out with is the truth. The fundamental relationship between an employer and employee is financial. Just think about that for a second. I realize that all of us aspire to have a deeper essence with our employees, with our team members, want a longer term partnership that includes emotional and other well-being elements. But we need to first and foremost realize that the fundamental relationship between employers and employees start out as financial. That's really and very simply the why we should pay attention to how our employees are doing financially, what that financial well-being actually looks like. And so let's look at that. And I'm actually going to showcase some others' data, because I think that's going to be important since you've seen enough of the data that I've shared previously. This is from Bankrate. This is less than 5 days ago, where they're saying that 3 in 4 millennials and Gen Z are worried about their emergency savings levels, specifically covering their normal expenses for the next month if something were to happen to their income. As Ben just laid out, we are in a especially precarious environment, and anyone that is financially vulnerable, unfortunately, is going to be exposed to whatever happens if there's a recession. When I specifically say millennials and Gen Z, I know that our gut instinct is to think, oh, that's just a small group of the population. But the reality is millennials and Gen Z combined today account for the vast majority of the American workforce, over 2/3 of the American workforce. They're no longer a fringe. They are the majority. We are the majority as a millennial myself. So when we're thinking about meeting people where they are, let's recognize that this is what's top of their minds. And what we realize is that emergency savings is top of their minds. And we'll talk about Secure Act 2.0 here in a bit. But what's been really interesting is from our data, we've seen that those generations, as well as others, find specifically emergency savings 2 to 7 times more attractive than most other financial benefits. We know that $1,000 in emergency savings can cut those loans and hardship withdrawals out of retirement savings in half. Our data shows that we've been able to drive up retention because we're connected to the level of payroll. We're able to see this actually manifest. We're able to drive up retention by up to 25%, if not higher in certain occasions. And of course, we've been able to expand financial inclusion and equity along the way. But again, let's not just look at our data, let's look at others that are talking about this as well. Here's Talent LMS and Enrich, others that are doing some great work in serving folks. Look at where emergency savings stands now that they have started asking the question, hey, where does this fit in terms of an employee benefit? It's right behind retirement savings. So that's what we're going to be focused on during this conversation. And one last bit, I'm sure that you're all familiar with Secure Act 2.0. That is something that has landed on December 29th, 2022, right at the edge. And of course, we are very much celebrating this milestone. That is a very good thing for more broadly the financial well-being industry. The thing is, there's some differences that you need to be aware of between in-plan and out-of-plan. And what has specifically happened with Secure Act 2.0 is that it has focused on an in-plan solution automation. Again, this is a good thing. What has happened is a good thing, and it enables us to be even more financially solid than we are today. One of the limitations that I wanted to highlight, though, is that their employee contributions into the in-plan emergency savings is limited to $2,500. And at the end of the day, it's still not reaching anyone that does not currently have those retirement rails. At Sunny Day Fund, we do focus on out-of-plan emergency savings. It's a simpler account structure with a broader outreach, less compliance for the employer without any contribution caps. And at the end of the day, enables a user experience that meets employees where they are. You can learn more about this, just look at our most recent blog post on in-plan versus out-of-plan savings. With that introduction, I'm going to turn it back over to Ben, who's going to moderate the rest of the panel.
Thank you. So that's a great sort of background on emergency savings as a whole and why it's relevant now more than ever. But now let's sort of get to the meat of the discussion here. We have sort of a panel of experts in the industry. We have Ashley Utz, who's a VP of HR at Kuna Mutual, Kurt Schusterman, who is the owner of California Closets of Tennessee, which is one of our customers. And then we also have Les Williams, who's co-founder of Risk Cooperative, and can give some insights into the brokerage side of things. So let's kick things off with Kurt. I'd love to get a background on you personally, and then also tell us about why you decided to adopt workplace emergency savings as a benefit for your employees.
Love to. Thanks, Ben. So yes, I'm a guy. I've been in corporate America. I was in corporate America 34 years before I decided to purchase this California Closets franchise in 2015, based in Nashville. So in 34 years in corporate America, I've had the benefit of seeing very large Fortune 500 companies, and I've worked with smaller private equity-backed ventures as well. So I've had the benefit of seeing how great companies work and how some not so great companies work. So I get to see the best of both, I suppose. For me, buying a franchise was really a kind of a personal mission to demonstrate, frankly, to myself how a great small business should operate. And again, I guess I'm the old guy in the room. So there was a book that really spoke to me years ago. I come out of marketing and strategy. As a book called The Discipline of Market Leaders, Choose Your Customers, Narrow Your Focus, Dominate Your Market, by Michael Tracy and Fred Wiersma. I was looking it up before the call. This is now 27 years old. I'm like, oh my gosh, such an old guy. but it was really simple, and it broke it down. It said, look, there's three ways to dominate your marketplace. It's either operational excellence, you just fine tune your operations like a Walmart or an Amazon, or product superiority, where you have the best mousetrap and people will pay whatever they want for that mousetrap. I think about Intel is always upping their game, or a new drug that comes out that people have to have. They'll pay whatever they need to have for that drug. And then the third was customer intimacy. I use Nordstrom as a great example of that, where people are going to pay and willing to pay more money for a better customer experience. So as a local franchise of California Closets, we do have a full production facility right here in Nashville, and we service about a 3-hour radius. And so while we work really hard to have good operational excellence, we'll never be as efficient as these giants who scale and serve multiple countries. And while our design and innovation are above average, there's always going to be someone else with a better, sexier solution on the design. So we chose customer intimacy because that was the one thing that, as Jim Collins would say, is that which you can be the best in the world at, or at least for us, the best in Tennessee at. So to make customer intimacy work for us, we built what we call a virtuous cycle. And that is, first and foremost, we pour into our employees, whether it's setting with the core values and then hiring the right people that believe in those core values. But it was all about, first and foremost, we take care of each other. We're 60 employees, so we talk about taking care of our brothers and sisters is the most important thing of what we do. So we take care of our people because we believe if we do that right, they'll take care of our customers in a like manner. And then customers will come back and take care of us with repeat and referral business. And we found this to be, frankly, very successful for us. So in addition to just the culture of people taking care of each other, we as a company pour into them. Again, for 60 people, our benefits are pretty stout. We have the usual benefits like medical, dental, vision, 401k matching, life insurance. But we also really lean heavily on financial education. I tell people all the time, you guys have something I don't have, and that's time. So you need to start thinking now about how you can always improve your financial situation. It's not just about retirement. And we're constantly reminding people that it's not how much you make, it's really how much you spend. So stop ordering your lunch from these other companies that will deliver it for twice the cost of the food itself. So we're always working on that. We provide free financial advisors to help them not only think about retirement, but all the ways they can achieve their life goals along the way, whether it's college or home ownership or vacation or new car or emergency savings. So we've been looking at this for a while, and we were thrilled to learn about Sunny Day. We looked at several options, and we chose Sunny Day because of the way their software works. You can save not just for emergency savings, but it gives you the ability to save for multiple, from multiple goals as well. So I just like the way they put it together. So we're just delighted to be about it. We just launched it. When was it, Ben? January. So we're still getting people to sign up and answer questions. So so far, so good. Very excited to be a part of it.
Yeah, I guess just want to double click on that last part and your actual sort of, I guess, decision-making process as you were evaluating some other options. What were some of your key considerations, and what was really sort of the deciding factor for you to go with the emergency savings solution over, say, a student debt repayment solution or something else in the financial arena?
Well, we didn't want to be a part of the ERISA solution. I mean, we like having the freedom of that. I thought the software was really good for us, as I said, but I like the matching program that you guys have. It's you look at the average daily balance at the quarter, then we can select to put a percentage in there. Others are more restrictive that way. So the way you guys do the match, I thought was really smart and seemed to work for the goals that we want to put forth.
Yeah, we're glad you sort of appreciated that, because we did design the product very intentionally to be rewarding and drive for positive long-term outcomes. I guess 2022 specifically was a tough year for a lot of American workers and employers for that matter. So did your team offer any incentives to keep your staff morale high before you came across the Sunny Day Fund?
That's a great question. I mean, and maybe it's just our business because we focus, maybe I'm getting too local for us, but we focus as a company on two things. We focus on customer satisfaction or high NPS scores and the success rate. How often do we get the job? It's construction, right? So you're never going to be 100%, but how often we get the job done on schedule, everything comes in right, we get it installed right, it's designed right, exactly what the customer expects. So we find that success is the biggest motivator over money, yes, they want money and they always want more money, but if you can install a great product and you're proud of what you're representing, you're proud of the company, and you have a great reputation in the market, that for us was a big deal. During the supply chain issues, I went out in the market and talked to vendors and did whatever I could to make sure we were not falling back. And thankfully, because of our reputation and our brand, we had problems, but they weren't like others. So just making sure that we could stay successful and serve our customers and have them write Google reviews that are amazing was really the key motivator for us.
Great. And I guess want to get some insight from some of the other panelists here. Ashley or Les, has anything Kurt said, anything you want to opine on?
Yeah, he hit the nail on the head when it comes right to taking care of your employees. When I get my opening salvo, that's going to be a big part of why Risk Cooperative has grown in 8 short years and how we have really good referrals from our customers. So many that we actually had to hire more people because of the inbound referrals that are coming in. But really taking care of the employees is really important because that's going to lead directly to the employer. So I'll touch on that a little bit. I was taking notes furiously as Kurt was talking. We haven't met yet, but I think we're long lost brothers somewhere. We have the same haircut, so I think that's part of it.
Great. Ashley, anything to add?
Yeah, I'll just add, both of them could not be more accurate. Pouring into your employees means that they'll pour into your customers. And the challenge employers are having right now, in addition to attracting and keeping talent, which I'll talk a little bit about, is engaging talent. People are tired. Like, I'm tired. Are you tired? It's been a long couple years, right? And so really making sure as employers, we're fueling as much as we can into our employees so that they feel appreciated in a way that comes out in the work that the organization does and the customers they support, et cetera.
Definitely. So I guess, Ashley, you want to give us a little bit more background on yourself and what you do at CUNA Mutual?
Sure. Yeah. I grew up in a small family business. Now we're the family business is a little bit bigger, right around the same size as Kurt's organization. So have kind of a small business background. Flipped over to HR at CUNA Mutual Group and have about 12-ish, 13 years of experience in HR, leading quite a few of our HR teams. Most of my focus, though, is really on employee experiences. So similar to how we talk about customer experiences, at CUNA Mutual Group, we have the opportunity to talk about our employees that way. And just to take a step back, CUNA Mutual Group is a mutual insurance company located in Madison. Although we have a largely remote workforce, so about 4,000 employees spread out across the country. For those of you not familiar, our mission is similar to Sunny Day, actually, making a brighter financial future accessible to everyone. So a lot of alignment there, and over 95% of credit unions are our customers, and about 30 million consumers protected with our insurance, financial, or technology products. So a lot of alignment in mission in terms of how important financial wellness is for individuals. Employee experience is complex. So a lot of organizations have shifted from your traditional HR to start to talk about employee experiences. And what that means is, depends on the organization, but specifically it's the research behind what attracts, motivates, and retains the workforce right now. And it's rapidly changing. So I know Ben shared some of the economic forces with us, so I won't go into too much detail there. But the truth is, even with some organizations laying off workers or reducing hiring, there's still a huge imbalance in the workforce, huge. So to the tune of about 5 million workers short when you look at job openings and the available workforce with unemployment rate. So organizations are having to get really intentional about what they provide for a total rewards package to their employees. I don't think I'm sitting on a single CHRO or HR conference where we're not talking about total rewards and talking about it through the lens of whole employee wellness, financial wellness being a big part of it. You know, I'm reminded as I talk to customers of ours that saving for retirement is a little bit of a luxury. You can save for retirement only when some of your basic needs are met. And so when we're talking about these economic conditions where rent is up over 8%, food prices are up over 10% year over year, your employees are struggling, just as we talk about customers are struggling. So we need to see our workforce in those numbers. And creating that competitive edge, a differentiator as part of your employee value proposition is really important. And so one of the things I like about what Sunny Day Fund offers is an opportunity to differentiate yourself as an employer, specifically through that financial wellness lens. Ben, did I hit on kind of some of the pieces you were looking for? What follow-up questions do we have? Anything in the chat?
Definitely. So I guess, you know, the sort of inflation and economic headwinds hit everybody across the board. Have you seen any difference in various segments of the workforce population as far as the benefits that they're requesting or that they see as useful?
Yeah, and I would say inflation hit everybody, but not in the same way. So one of the things I like to use is we're all in the same storm, but often in different boats. And your higher wage workers are faring a lot better through this inflation. They have savings and other things they can dip into. So certain demographics of the workforce are really struggling. Some of it's industry dependent, some of it's based on wage. But the other thing I should make sure to say is we also know that higher wage earners are struggling to save. And so some of it is building that education into our society and the tools. We talked about trade-off choices a little bit. Kurt hit on that. So maybe a long-winded answer of it. Inflation is certainly hitting everyone, but it's not hitting everyone the same way. And it's a lot harder to make trade-offs in your budget when you don't have a lot of money in your budget to start with. And we also know people of color, specifically women too, but mostly people of color, were hit the hardest over the last couple of years in a combination of COVID factors as well as some of these economic pressures.
Definitely. And touched on something there. The sort of Q&A feature is open for anybody who's attending that has any questions that they want to ask. Feel free to drop those in there. We'll be monitoring that with the live panel as well. But Kurt and Les, is there anything you that Ashley said that you want to elaborate on?
Well, actually, it was spot on. I liked her comment that the employee experience is very complex. And again, for a company like us, where we have people that, I don't know, are making $45,000 a year working in a shop to six-digit bougie designers, it is complex. And I think you're right about the lower wage workers having more struggles. I mean, you got to meet the basics. It's Maslow's hierarchy, right? So you got to at least hit the basics before you can start to get even thinking about self-actualization. So trying to make sure that we're helping them along the way as they're meeting their, everybody talks about salary increases or wage increases. Well, how high do you go, right? And what's reasonable? And even then, it's not how much you make, it's how much you spend. Right? So we're trying to give them the right basics so that no matter how much they make, they're stewarding their funds better. So it is. I don't have the answer, but I just think it is a challenge when they're low wage workers. make sure that they're managing their funds effectively, especially even if you have just $400 in emergency savings, which I would venture to guess most of them do not have.
Yeah, and that great points, Kurt and Ashley hit the nail on the head. I agree with Kurt and Ashley regarding folks who can't think about 30 years from now when they retire at 59 and a half, when they have a bill to pay today. One of the clients at Risk Cooperative, they're a food service group. And the boss was telling me that the CEO was saying, hey, you know, many times my employees tell me, I have a 401k plan, I have 40 employees. How come nobody is using the 401k? I match too, I'm giving you money. And he said later they told him, I have some childcare needs I have to worry about today or tomorrow or rent. So he also actually is a great person. He hands out loans, personal loans from the business to help some of the employees, tied them over from paycheck to paycheck period. They're paid bi-weekly. So he's using Sunny Day Fund to actually teach his employees how and why to fish, not just handing them a fish. Now they've paid back the loans, which is good. That's the important part, right? But the bigger goal is teaching the financial wellness. So I think that's the gap that Sunny Day Fund fills.
You know, you sort of touched on something there that Cruz had a follow-up question on, specifically, how do you consider employee-based small dollar loan programs, which give employees access to safe and affordable credit? How do you sort of balance that safe and affordable credit piece with, you know, proactively saving and building up that financial buffer?
Yeah, and I think there's some form of earned wage access is, I think, a term that's used quite a bit around that. Great question from, I believe, Cruz asked that. So here's what's interesting. That last point I said about teaching somebody how and why to fish versus just giving them a fish. I view that loan program, that's more of a stopgap solution. The bigger issue that I've seen with a lot of my clients is they don't understand how to start saving and building a financial future so that you have a buffer, so you don't need to get a loan in the first place. Now, the good news is many loans that I've heard of have no interest rate if you pay it off by your next paycheck. But what that does, Ben, it gets employees in the habit of saying, oh, if I don't have this money, that's all right, I'll just get a loan from my employer, who's great. This is different from back in the days, like Kurt mentioned, he's been in business 34 years in corporate America, right? Gone to the times when people stick at the same company or companies for, you know, more than 5 or 6 years, right? So if that person were to go to a different company, what if they didn't have the same leniency towards loans? That person doesn't know how to fish, right? He or she does not know and understand the value of saving. So that's where I say that those types of programs, Cruz, are more so stopgap measures, because not every employer is going to be as nice as a Risk Cooperative, for example, or as a California Closet. There are not that many benevolent employers out there. Hopefully that will change in the future, but I think that's my answer to that one. I don't know if Kurt or Ashley has anything towards Cruz's good question.
Yeah, I guess.
Yeah, I was going to say, it's a great question. I'm a small business guy. I'm a sole owner, right? So it's a family kind of style of business. So when people something happens, they're going to come to me and say, hey man, I'm a little short. Can I get a loan for, 3 months, 6 months, something like that to pay it back? And I could just say, no, but I'm too weak for that, I guess. So, I am now starting to charge a little interest just to make them accountable, to say the money costs money. But it's a tough one. We have something called, we use paychecks for our payroll, and they have a system or program called FinFit. And I haven't dug into it too much, but I liked it because I understood that was a way for people to get a loan and not have to come to me. But I think, as Les was saying, if you don't pay it off after the next paycheck, they start to have some usury rates in there to pay it back. So I don't know of a solution. One thing that did come to mind, however, is that when somebody does now come to me and ask me for a loan, I'm going to say, that's great. I'm going to match it. Whatever you put into your Sunny Day Fund, I'm going to match that amount or something to that extent, so I can teach them to fish. I love that expression. We do a lot of community give back, and I always say to people when they ask, is like, well, we like programs where we give a hand up, not a handout. So you got to kind of better yourself as you go along the way. So if you guys have a program like that for small loans, I'm always ears open to hear that.
Yeah, that sort of ties into a question we got from Jervis, which I'll direct your way, Ashley. There, they asked, there are also great solutions like the Community Impact Fund that allow employees access to no interest loans when there's a financial emergency. So how do you sort of compare that access to credit to an emergency savings solution?
Yeah, I think I would kind of go back to what Les said. So a loan is an option, but it's a band-aid, right? If you get to the root cause of it, the cause is folks don't have emergency savings. They don't have money set aside for all of the really unexpected things that can come up. So I think both of those solutions have places. I don't know that one is better than the other than they're solving very different things. You have to have a band-aid approach like that community impact fund option. And we need to try to change some of the consumer, in this case, employee savings behaviors to truly address, I think, the systemic problem.
Great. And I guess, Ashley, we also got a question about, why can't people just open a bank account on their own and do a split direct deposit to save? Could you maybe elaborate on maybe some of the consumer behavior that you've seen and why people might not find that quite as effective as a paycheck deduction like Sunny Day Fund?
Yeah, I'll hit on a couple things, but welcome, Les and Kurt and even Sid kind of into the conversation too. There's something easy about direct deposit, right? The process is very easy, doesn't take a lot of if I'm the employee, doesn't take a lot of my involvement. It just kind of happens magically. Now, we in HR know nothing happens magically, but for the employee, it feels very smooth, right? So anything we can do to reduce the complexity of the behavior we're trying to address, which is saving, is helpful. And then I think to have the additional incentive of the employer match all there in one account is also really helpful in terms of incenting that true behavior. But Les and Kurt, what would you add in terms of comparing and contrasting those two?
Yeah, I think for me, the bigger thing, and I'm sorry, I was like glancing through the chat because people had some good analogies. One person's, Rachel said it's like the FEMA concept. It's a levy versus the FEMA. Say that the goal of the workplace emergency savings is actually to develop a behavior overall. It's actually a gateway. This is something that I've talked to a lot of some of our clients at Risk Cooperative. It's a gateway drug to other types of things like learning how to invest in stocks and bonds. Some of the people that I've spoken with, and I'll go into my spiel in a little bit, with some of the brokerage firms like RCM&D, gentleman over there that I work with, Rob Kotler. He says, look, the emergency in Pavlov's hierarchy, emergency savings is the first thing. Before we can even get to retirement, you got to start at the very bottom, right? Emergency savings. Then from there, you look at retirement. Then you start looking at things like stocks and bonds and other types of things that people can invest in, some unique instruments like bonds and saving and those types of things. And so while the loan programs, and there's been a lot of activity in the chat talking about it, including my good friend Fred Spohr. Hello, Fred. I worked with you very closely in the past. There's been talks of, are there solutions available that are those lending type of platforms? I believe there are, and they are good. We still need those. But like Ashley was saying, that's one part. And the other part, no different from your investment portfolio, you invest in different things and you do different things. The other part is, though, for those workers to actually learn how to save. Here's an analogy that I use all the time. Brokers, and I'll give my spiel a little bit, but I work a lot with brokers. I'm an investor in Sunny Day Fund, and also I advise a lot of the operations. But brokers, always say, well, what if I just tell people to use a savings account, right? Or what if they just use a high yield savings account? Wouldn't that be better than using something like Sunny Day Fund? I use the analogy of when you walk into a gym. If you've never been to a gym for the first time and you walk into a Gold's gym, like one of the ones I go to is a meathead gym. If you walk in the first time, you're intimidated by the chalk that's in the air, people grunting, right? And lifting weights. Oh, start lifting weights. Here you go. that normally doesn't happen. Usually it's a trainer or you have a paper that tells you what to do and how to do it. So with workplace emergency savings, it's mapping out that game plan of how to save. That's that path we're talking about. It actually started on, this is the how to save, right? And the other paths like the loans, there's places for that too, for other things. They work in concert, no different than somebody's investment portfolio. So I'll be quiet here and turn it back to the moderator.
Yeah, that's great, Les. Thanks for that analogy. And that makes a lot of sense. You know, I've tried to get going in the gym quite a few times with no paper or trainer, and it just doesn't really work out the same. We got a slightly more mechanical question from Frank that I'm going to turn over to Sid. So can the program work for solopreneurs, or do they need to be a W-2 employee working for the man at the company?
Hey guys, I'm in the background still, so I'm hopping on here just to answer a couple of these questions. So for Sunny Day Fund specifically, we do focus on W-2 wages, and that's just really because we're looking for some legal clarity that we anticipate happening with the next version of the Emergency Savings Act of hopefully 2023. But as of right now, we're unable to do solo. There are other programs that I would happy to point you to. One specific program is called Saver Life. We have certainly seen a lot of success with people staying true to their savings goals. With that, there isn't an employer match, but there's price-linked savings as a way to drive longer savings behavior over there. Any other questions that I can answer, Ben, while I'm up here?
Yeah, sure. So got a question from Fred. Is there a solution available for the employer to set up a lending platform for small loans or disaster relief and benefit from charging a low interest rate on the employee loan? I know there's currently not that capability on Sunny Day Fund, but I know it's something we've thought about. So I don't know if you want to speak to the product roadmap there.
Yeah, certainly. So we do have partners along those lines. So one specific company that can point to on the disaster relief is certainly Canary. So in those types of solutions, we typically partner to provide coverage across a lot of different financial services. Coming back to some of the points that have been made, when we think about the role that we're playing at Sunny Day Fund, we really see ourselves as like a foundational layer that a lot of employees are thinking about. Coming back to the stats that I was showing earlier, right? Like we always thought about retirement savings as that foundational financial benefit in addition to obviously a salary. But what we're really learning from employees is they're thinking about emergency savings that way. And I think I saw Shabri talking about the same in terms of sharing some of her research from EPS. At the end of the day, when you're starting to engage with emergency savings, that's then becoming this gateway to putting more into your retirement, leveraging like student loans and other elements as well. So hopefully we've answered that question as well. And I'm going to go off video because I want to make sure that Kurt and others are doing most of the talking here.
Thank you for that input, Sid. I know we've sort of talked about quite a few things as we fielded some of these questions. So Kurt, Les, or Ashley, anything that we've talked about that you would like to expand upon?
Yeah, I'll go ahead and give. I do my quick little spiel because some people send me a private chat like, "Hey, who are you?" Wait, I'll give my quick spiel. So I'm Les Williams. I actually co-founded my own insurance brokerage firm. Now it's 8 years ago. Risk Cooperative. We do employee benefits as well as property and casualty insurance. And when I found out about Sunny Day Fund 2 years ago with an investment club, I'm a part of a private investment club. We jumped on it. My other investors, they thought it was cool. Hey, this is great. Sounds cool. This looks to be the future. But I put on my benefits brokerage hat and I said, benefit brokers, the one thing that all of us look for are new and innovative solutions on the horizon. Give you some quick examples. Pet insurance. It's been a pretty popular thing. I know Ashley shook her head. It's been a pretty popular thing for the past, now probably like 5 years. It's really ramped up. During the pandemic, when people were fostering pets and those living alone were buying pets, it really took off, right? It's $1 billion business. So pet insurance big, 529 savings programs are big. My company, we work with a company called GradVisor to offer 529 platforms. But what's been kind of the the underlying benefit, the novel benefit that's been out there, is workplace emergency savings. So when we invested in this company, I started reading more, and I was working very close with Ben, the chief of staff, and of course Sid. And I said, look, I'd like to take up the flag of helping Sunny Day Fund be introduced to brokers. I have a strong network in the brokerage community. I mentioned my buddy Fred Spohr, who's on this call. We've done work in the past together, because brokers are always looking to get in front of questions that clients are going to have. The worst is, and it happens to everybody, when a client calls you up and says, hey, so I heard this new thing coming out about mention, employee benefit number X. Can you tell me more about it? We always like to be front and center of those types of conversations. So that's one of the reasons that really drew me in to help make these introductions. Getting back real quick to one of the things Rachel mentioned in the chat, hey, how come somebody just can't get a savings account? Well, beyond the fact of people who are just starting from ground zero that don't know a lot about the mechanics of savings, many times workers in this demographic that we do target, usually it's below 75K. It can be above as well, but usually below 75K in salary a year. Some of them don't have the like Sid mentioned in the chat, the credit checks, or they can't qualify for some of these high yield savings accounts. They can't go to Marcus by Goldman Sachs, right? There's certain requirements and certain minimums that are needed that they just can't get into. So when I was talking to my fellow brokers in the brokerage community, I mentioned that to them, and they're like, oh, I got it. Never thought of that. So it's small things like that. What I will do in the chat, I'll drop in an article that I wrote that talks in more detail, a publication called Risk and Insurance. It's a completely nerdy risk management insurance rag. You guys can take a look at it, but I go into more detail about what I feel personally about the next big benefit that we're going to be talking about is workplace emergency savings. Now, much like when companies were offering 401k matching, and that was a big thing, all of a sudden, right, everybody matches. That's the norm. I feel in the next year or two, it will be, and I hope, the norm for companies to have workplace emergency savings. And we'll look back a decade and say, why weren't they doing that in 2000 or 2005? So those are some of my opening thoughts from a brokerage perspective.
Yeah, that's real helpful. And you brought up a lot of good points, but one thing that sort of, I guess, stood out to me is just how many benefits there are being offered right now, and how there's so many options for employers to choose from. So, Kurt, I'd love to get your sort of opinion as you think about employee benefits, how best to invest in your employees so that they can serve your customers, as you spoke about at the beginning. How did you take a look at pet insurance and some of all these other benefits being offered? And then how do you compare emergency savings to those?
So I saw something on a truck one time as I was driving around and said, we hire you to retire you. I thought, that's us, man. We're gonna hire you to retire you. So I tell guys all the time, I said, if you run a beam saw, you don't have to, you can run a beam saw for the rest of your career and retire. Let's figure out how to do that together. So the main thing, again, we're talking about just an aside here. I've seen the chat about why not just do this in a savings account. Well, I think unless I missed something, the problem I'm seeing with that is as Ashley said, payroll deductions are kind of magical. If it's $5 a paycheck, you're never going to see it. $10, you're not going to see it. So do that. And then secondly, you get to take money from the man, as Frank would say, right? So if I'm offering a match, hey, let's get everything Kurt's willing to give us, right? So I know they do that, but we have like 91% participation on 401k, because I'm telling them all the time, says, come on, man, I got this money sitting in my pockets. I'm waiting for you to come get it. So, it's fun that way. For other benefits, the pet thing, not so much. The one I'm struggling with the most, frankly, is because back in my day, you could have one person working and that was enough to support the family. Today, it's not so much, right? So wages have not kept pace with cost of living, as far as I can tell. So you need two people working in many instances. So the childcare expense is something that I've yet to figure that out, how to be equitable with that. Some people have kids, some don't. We do offer a dependent care contribution where people can contribute pre-tax dollars into their flex plan, and then from that flex plan, they can make payments for their child care or dependent care if it's a parent that you're taking care of. But I've yet to find a really good program for that, and that probably would be my next thing.
Yeah, I guess. Sorry, go ahead, Ashley.
I was just gonna add, Ben, there's a couple things in there that I think are important nuggets to pull forward. One is what Kurt mentions is something employers everywhere are struggling with. There's such a wide variety of needs. You can't possibly fill them all with one solution. So the best thing you can do is build an array of options, right? Options that folks can pick from that meet them where they're at. And emergency savings is one of those. And the other thing I'd call attention to is this concept of an employer value proposition. I mentioned it just briefly before, EVP, employer value proposition. The whole point is what are you uniquely offering as an employer to your employees? Everyone's looking for that something unique, that something special. And by having creative benefits or total rewards package, or at least creative option in that package, it signals something about the culture of the organization they're joining. So on one hand, all the things we talked about, financial wellness, are completely true and accurate. And the other, employees are looking at their total rewards package as an artifact of the culture. And so if they see creative total rewards options, they are going to assume you are a more progressive, creative employer in general. And that's an important piece when you think about attracting and retaining talent.
Yeah, and sort of Kurt touched on some things that I find really interesting. One, like as a business owner, figuring out what's most important to his employees and what benefits he can offer them and have the highest impact is sort of a struggle given how many different options there are. So Les, do you maybe want to elaborate a little bit on some of the reporting that Sunny Day Fund does and can give to brokers to help them more accurately advise their clients on their overall benefits package?
Yeah, 100%. And my internet's a little bit stable, so if I do shut out, you'll know, Ben, it's not because I don't love you. So one of the key things that we've been doing, and what I love about the feature, is that the data and statistics on actually what people are saving for, i.e., and this is bigger than just an emergency savings fund. You can actually have virtual accounts that talks about, oh, I want to save for a retirement, retirement, yes, but I want to save for a vacation to the Bahamas. I want to save for a new baby on the way or a new car. So these virtual accounts that are set up within a Sunny Day Fund account are important because the employer, like Kurt, would have access to how much people are saving and what they're saving for. The reason why that's important, because brokers and also HR luminaries like Ashley, we want to know what people are saving for and how much they're saving for, because if we can measure it, then we can improve our benefits package. So if all of a sudden, right, the world's been shut down for 2 years, now it's opening up and airfares are crazy, people are traveling globally. If you're finding your employees are saving more in your virtual accounts for a vacation, you may want to revisit your policy of leave and PTO. So those are the types of things. Again, it's aggregated and anonymized. We want to make sure that we don't have individuals, information available so that we can see, the names associated with this, but it's aggregated and anonymized data to help HR benefit brokers and HR VPs make better decisions.
Definitely. I guess sort of one thing that I think we found was shocking was some of the top goals we found was, as you sort of alluded to, and Kurt mentioned as well, saving up to have a kid, because even with insurance that costs thousands, if not tens of thousands of dollars. And that's just something that we didn't anticipate Sunny Day Fund being used for to the extent that it was. We got another question from Patrick in the chat. How do you all balance the need and importance of workplace emergency savings with the benefit of putting funds and employer matches into a tax qualified or a qualified tax deferred or tax-free retirement plan? So maybe Kurt, if you want to talk a little bit about how you view investing in a post-tax benefit like Sunny Day Fund compared to a tax advantaged investment account.
There's just ease of implementation, frankly. for us. And we don't want to do it now. We have our annual meeting in January, and I didn't allow, if I'm understanding the question right, the out of plan versus in plan question, is that what you're asking, to why I chose one over the other?
Well, I think the question is more getting at, like, so from a budgeting perspective as an owner, if you think about matching sunny day fund, which is post-tax, and versus increasing the match in the 401k, which is tax advantaged.
I see that. Yeah, it was de minimis. I mean, it wasn't enough money to worry about at our level. Maybe, I could be squeezing some more dollars out of it, but I just think the advantage outweighs the savings. The advantage of this particular program with your software and the ease of use and the unlimited contributions for employees that adapt to our wide demographic. I just think the benefits outweigh it. And again, it's not I love Ashley's comment so much. It's the benefits tell a lot about the company, right? It's like, do you really put your money where your mouth is? Do you really care about your people? Or is it just like, one of those things on the wall in big corporations that say our people are our greatest asset, and then we follow the greed is good mantra. So I don't know. I think it just wasn't enough for me to worry about. I thought the benefit of the program is better.
Yeah, and I think in the chat, Jervis sort of hit the nail on the head. It's really about equity at the end of the day, because the people that advantage the most from a tax deferred savings are people that are paying the highest taxes, which are the highest income individuals at the company. And sort of the people that are most financially strained have a very low marginal tax rate. And when you look at the number of people that are maxing out that contribution to your 401k, Kurt, I know you talked about struggling to get people to maximize the amount of money they're taking out of your pocket. I'm sure the highest earning people at the company, you don't have any problem with them contributing to the 401k. So right. There's a big equity component to it as far as who benefits the most from the tax advantage funds and who ultimately sort of needs the funds the most. Well, we're sort of wrapping up on the hour here. Appreciate all the engagement from the chat. We have a few questions that we didn't get to, but we can hold those off for next time. I'm going to spend the last couple minutes here just sort of quickly highlighting some of the things that Sunny Day Fund does for its partners. So we might have some partners on the call right now, but this is just sort of an example of some of the collateral that we give to people that enter a sort of a formal partnership with us. We have a referral partnership agreement. We have multiple ways we can structure that depending on what the individual broker is solving for and what their goals are. There's more than just sort of these three things. We just wanted to highlight a couple, one being a one-pager that sort of you can share directly with clients. It's pretty simple, self-explanatory, had some of our key clients, as well as some of the recognition and accolades we've won, like the best in market emergency savings solution. We also have a more in-depth slide deck that we typically go over with our customers and our partners, outlaying the problem that employees are facing. Here, sort of, I chose a snapshot of the problem specific to employers, as well as a detailed overview of our platform. And so we give that to our partners so that, we don't expect them to remember everything after having a couple calls with us, so they can reference that and refresh their memory on what exactly Sunny Day Fund does differently. And then we also have sort of a cheat sheet, if you will, with specific talking points and things to highlight as far as key differentiators from other competitors in the market or other benefits that a client might be considering, and how we can complement those benefits, as Ashley said, to sort of focus on the employee value proposition as a whole and really get to that total wellness and health. Another thing that just don't have on here is a link to a brief demo video where Sid goes through a demo of the platform and sort of highlights some of the key differentiators, because we didn't really have a chance to talk about it here, but we built the platform in a very specific way to really sort of drive that behavioral change. So that's one of our key differentiators as well. And then I also wanted just to leave y'all with a little teaser for the webinar we're doing next month. As I mentioned earlier, we want this to be a monthly recurring webinar. And next month, we're going to be talking about sort of our integrations with Workday and some larger enterprise clients, and then also the role of rewards in savings. We have our guest speaker is going to be Erica Hayton with the Cystic Fibrosis Foundation. And then we're also going to have another guest speaker, which we're still confirming. And we'll follow up to everybody here, as well as the greater network, with a more detailed agenda to follow. And with that, I want to sort of close out our first monthly webinar. Thank you, everybody, for joining, and appreciate you taking the time to listen.
Thanks, Paul. This was amazing. Have a sunny day.
See you next time. Have a sunny day.